Well, now let's get talking. While electricity supply has been a critical challenge for Africa's largest economy, the Nigerian government in 2013 opted for privatization with projections for detailed plans for stable electricity supply. But 10 years after the move, the state of the sector has remained dismal as most actors fail to deliver on key performance indicators. With liquidity crisis hovering about 4 trillion naira and indebtedness which has affected the survival of some commercial banks, the generation companies, transmission as well as distribution are reportedly gasping to remain in business. To this end, the CBN has in the past 5 years spent more than 1.5 trillion naira to keep the nation's power sector from collapse, with little or no effect on the Nigerian economy as businesses and citizens are yet to reap its benefit. With this huge financial intervention in the power sector, the big question begging for answer now is, why is Nigeria's power sector still at the state of comatose? Well, to provide solutions to this question and, of course, many others, and focusing on this intervention by the Apex Bank, I'm being joined virtually by an expert in this field. Yes, he is the former chairman of the Nigerian Electricity Regulatory Commission. He's no other person than Dr. Sam Amadi. Dr. Amadi, thank you so much. It's good to have you on the program this afternoon.
Thank you. Thank you very much.
We can call it loan, we can call it grant, we can call it, so many names we could call it, special intervention funds, special metering funds, all of this coming from the CBN and sometimes from the federal government into a privatized sector. I want to ask you, is this really the way to go?
Well, yes and no. I mean, there is perhaps at the stage of our development of our market, electricity market today, there should be significant government public sector expenditure. But then it's where you are spending. So, for example, government will continue to improve regulation. Government will still make investment in transmission since it's still a public monopoly. But then the kind of intervention that we are seeing in terms of giving loan support to discos, show, and of course generators, show the low liquidity and the financial status of this market. The assumption on privatization, the major driver or objective, and in fact justification for privatizing, is that once you privatize, the sector will be more attractive to private sector investment. But it's arguable whether we have seen significant private sector investment after privatization. And that the debate might be around whether we've done enough to make the sector attractive, or whether we have oversold the notion of a private sector investment in a market that's like ours. So what we see is that government has continued to do the heavy lifting, and some of those heavy lifting as a result of low private sector investment is because the sector is still not attractive, or maybe we assumed a lot about how privatization will reshape the commercial, the financial, and technical structure of this market. We've not seen that significant transformation. So, but in a sense, yeah, there should be continued public sector investment in electricity, but not of the sort that begin to do exactly what we did pre-privatization, but a sort that maybe provides common goods like transmission network until we privatize that side, or somehow attract more private sector investment. But the investment we are seeing in metering, this should be part of the responsibility of the discos themselves. But because they don't have good revenue, maybe the tariff is a problem, collection is a problem, change management is still very inefficient and rudimentary. So this is a market that is still suffering, needing drip fed by public sector, and that's what the idea of privatization. So it speaks to whether there was too much hope, too little realism, maybe too little realistic reform of that sector before privatizing.
take you, let's stay a little with the distribution companies. The argument continues, which is the weakest link? Distribution, transmission. The argument is on. I don't know which. That discussion is open. But my question would be, with all of this support, the distribution companies will hold on to the fact that they want a cost-reflective tariff. I know why I'm asking you this question. Which comes first? The rehabilitation, the improvements, or paying more before we get the service? The chicken or the egg?
I think it should be both. I mean, but the question is, look, from 2011, when we started the tariff change in order to stimulate and encourage investment in the privatization exercise, we've had significant tariff increase. I mean, if you look at where we were in 2010, probably one of the lowest in West Africa. Where we are today, arguably one of the best in West Africa, or at least close to the top. The tariff is not as bad in terms of unit cost, average tariff for each of the discos. It's not that terrible. Yes, one can argue there's still room for tariff increase, but what has not happened is proportionate efficiency. We adopt the incentive-based regulation, and what that means is that tariffs and other forms of regulation are geared towards creating incentives for operators to improve their efficiency. So customers can argue that, look, we've seen maybe 4 or 5 different tariff changes. We now have the so-called service-based tariff. We also have tariff belts or segments where some people are paying more because ostensibly they're going to have a longer hour of stable power. The question is the sector really generating proportionate improvement, gradual, but consistent improvement in the quality of service? So the theory around tariff increase is that there should be 2 things. One, you don't have to have a rate shock. I mean, you can't just take this tariff to 180% increase or 100%. Any increase above 20, 30 at the time is considered in the industry as rate shock because it has implication for household finance, implication for socio-economic well-being. It limits the capacity of people to purchase other essential social and economic goods, health, education. You are dealing with a limited disposable income. And so tariff increase should be part of a structured socio-economic policy that enables more affordability, works against under-consumption of critical economic and social goods. Yes, we should always increase tariff when it's necessary to rhyme it with cost of production. But again, efficiency should be improving so that the average cost goes down, and therefore the average tariff kind of declines. Capacity, increase in quantity of power available. So the level of inefficiency in this market, it requires improvement from the supply side. Not necessarily that you're going to cover all this inefficiency with tariff increase. So if you do a lot of tariff increase, it might come to a point where the incentive to pay becomes less because what you are getting vis-a-vis what you could provide by alternative, the gap is too small. So people can argue, why don't we stay on safe generation? Why don't we use solar panels and all kinds of stuff instead of paying for irregular and very bad power supply? So I think that the discourse should also think smarter, that there are low-hanging fruits. We need to ramp up quality of power supply so that we can incentivize tariff payment, and that will help the regulator unlock more tariff increase. Because if tariff increase gets too high and the proportionate improvement doesn't happen, then the total revenue spent for households on power will be too high, and they might be taking around alternatives. It also is going to affect power theft, because people will now have more incentive not to pay bills, to bypass, to pay electricity workers, to maybe reconnect them And basically, you increase the losses, both in terms of revenue for discos and overall ATT&C losses. So we need to, hew our two ends, improve tariffs, but also focus on improving quality of service so that as they improve, more tariff increase, and then you come to a point where you will now probably be having, reduction in tariffs, or at least some kind of stable tariffs that don't have to change, except there are very drastic changes in production cost or some interventions that require more procurement and therefore more cost, and then perhaps a tariff increase.
You touched on something very important there, energy theft. At this time where we're trying to be accountable with the 4,000 megawatts that we generate for a country of more than 200 million people or persons, how you prefer it. But let me ask you, obviously, some will say there is need to move away from this greed. I know we've discussed this before. And when I was looking at the expenditure, I saw a 140 billion social connection intervention fund. That's for solar connection intervention fund. And many will say maybe it's for the nooks and crannies of this country. But how well are we taking advantage of other sources? Obviously, the greed cannot sustain us. I think states can now take charge one way or the other. Can you speak to this, Dr. Amadi?
Sorry, I lost the point. Can you go back again?
Okay, I was talking about the challenge we face with regards to the greed. We know that obviously this greed cannot supply what we need. What are the options opened for us? Can the states begin to look inwards now and generate their own power?
Well, there's always the regulatory framework for that. Before we left NERC, we had the embedded generation network regulation. We had the embedded independent distribution network regulation and independent transmission network regulation. Now, what are those supposed to do? Is to provide a framework for states to take, you can call it, micro grids. Some clusters that were not efficiently connected to the power grid, they can create microgrids, serve them with embedded power. So without even altering the constitutional framework, you have enough legal, legislative, and regulatory framework for states to begin to fill the gap in the grid capability. So that with embedded power, with distributed generation, you can begin to fill the gap. And again, they can also improve the existing DISCO capabilities in their states. Many of these distribution companies probably need to put up new networks, strengthen their existing networks so that even the power that's available, they can efficiently supply it to homes and businesses. So these are things that can be done, low-hanging fruits. In the long term, we can look at, of course, the president has signed a new law that authorizes states to regulate transmission, distribution, and generation. I mean, that comes with a lot of chaos and incoherence, but it provides perhaps an opportunity to rethink the grid. And we can start with a regional grid, Western grid, Eastern grid, Northern grid, Southern grid. I don't think state grids are feasible in terms of grid connection. But I think that regional grids can become the way to go. You regionalize the TCM, then you create incentive structure for some areas to be more efficient than others. Now, the other side of it is that some of the inefficiencies in some of the inefficient places will exacerbate because they won't build on the efficiency in other places. So you might have 4 grids in Nigeria, each of them at different level of efficiency and inefficiency. That could be the way to go for the new government. So we look at regionalizing the grid and therefore begin to see some grids do better and stimulate competition. And then if you are doing that, you think around how do we ramp up production of power? We can't be dealing with 4,000 megawatts and talking about states distributing or generating or transmitting power. That doesn't make sense. Let the states now build power plants like Lagos have their IPPs, like Edo has Azura, that's even though not state-owned, but with some state participation, like Akwa Ibom has. So if you have those power plants and you have capacity to regulate the distribution side of business, then you can move forward with the notion the states can even embed power in those ring-fenced areas, and then you have better power. So with changes in technology, with the fact that all over the world we're moving into more modular power supply, we might see states leverage on their natural resources and fill the gap, while the national grid is restructured in a way that will make for more efficiency and sustainable financial, investment.
Well, like finally, yes, investment. Let me take it up from where you stopped. Despite this challenge, we still see some international bodies showing interest in Nigeria's power sector. But I want to ask, how well can we make this sector more attractive? The same thing we face with our oil and gas industry, talking about petroleum exploration and all of that. But how can we make the sector more attractive? Are the investors and government keeping their side of this deal? That is also something that is very important.
I think we'll start with being less political about the grid. I mean, there will be obvious shortcomings. Some people will not have the same quality of power. We need to really decentralize the power sector, not in terms of states having a bragging right, even states that can't even put 1 megawatts, but in terms of looking at the power as something that's going to be asymmetrical. You will have the same power supply in Lagos as you're going to have in Yola, with a coal disco and the Keda disco, and with the commercial nerves, revenue stream. These two discos will be better managed, better, we have more capacity. So people in Lagos might have more power than people. So once you depoliticize it and then look at it as a technical problem, financial problem, they begin to solve them in light of reality. For example, why didn't you have all our power plants, most of them in the Nile Delta, where you have oil, where you have less need to transmit gas to power stations, and therefore you economize on that cost, and therefore you have better generators, and then you can now involve the generator. So those kind of technical thinking should replace the political thinking. And in the short term, we will accept some shortfall, some discomfort, some inequities, and some asymmetries, and then build on them to create a holistic, more competitive electricity and more efficient electricity market. So I think we must admit that there will be some inefficiency at this moment. There will be some shortfalls, but let's be more, professional and less political in running the grid.
Wrapping up, I'm done actually, but I'm just hopeful that someday we can exceed this 4,000 megawatts generation capacity. Now, the TCN will continue to tell you we can do better than this. Where is the challenge? Let's end it around that note. Because when the TCN is saying we have the power to wheel more than this, the discos are saying the discos are not taking what they are wheeling out. The gas guys are on the other side saying we have not been paid our dollars for the gas. What is happening?
Well, I think both sides have truth. TCN, yes, has capacity for more than the 4,000 we're doing. They claim, of course, I think they have more capacity for like 600 megawatts. But the question is not the capacity in the general sense. The question is always, can you pick a load at a particular place at a particular quantity? So TCN has capacity maybe up to 7,000 megawatts, depending on the context, depending on where the load is located. The discos are the major problem now. They can't take more than a particular number because their network is weak, because they have not made the right kind of investment, and they can say, we've not done this because, how can you make investment when your revenue profile shows that you can't pay to the market operator up to 40-70% of the power you receive. So you collect 100% power, you only remit 40% because most of them are losses you can't collect, and some of them you collect, but you can't pay gas. The generator can't pay for gas supply, and therefore gas providers have no incentive to supply adequate gas to the generators, and then sometimes the TCN tells them to shut it. So really the problem is that the discos have to do better in improving their network so they can at least take the 6,000, 7,000 that the generators can actually do with gas availability, and that transmission can at least take up to that amount if where the loads allocated are reachable. So we need to see a rapid improvement in disco capability, in transmission capability, and that's what the Siemens deal was supposed to do. Although it kicked off late, it didn't start as planned. There are many issues to deal with. So I think that, look, the biggest challenge is fixing distribution and transmission in the short to medium term. And in the long term, we'll still need to expand generation capability. But for now, the priority should be fixing disco and transmission. And they need to retool regulatory framework. The regulatory authority need to be much more proactive and efficient. And then policy, very important. The role of the ministry. The ministry has become more like a drag on the improvement of the sector rather than its impetus for more commerciality and improvement overall.
I must thank you so much, Dr. Sam Amadi. Always interesting talking to you. And we're examining issues around Nigeria's power, electricity sector. Former chairman, Nigerian Electricity Regulatory Commission. Do have a great weekend.